Hey, it's Clay, and this will be a video chart on ticker symbol DPW. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price, and then just makes mapping out levels of support and resistance a bit easier to see. I did this analysis yesterday, so that is where the green and red line annotations are coming from. And after today's price movement, yeah, I'm not going to quite use the word a pump and dump, but if it walks like a duck and quacks like a duck, it might just be a duck. But like I said, I'm willing to cut the bulls a little bit of slack here. But real quick, what do I mean by pump and dump? I'm not saying anything about the company. I don't know anything about the company. I'm making that statement based solely on how the price is acted. And, you know, like I said, my definition of pump and dump, price makes a really nice move, and then within a relatively short amount of time, the price goes back to where it started, or in some cases lower. So I think we'd all agree that, you know, when you factor in yesterday's price movement, that was a really nice move. And then all of a sudden, this has all happened in basically a day and a half. So hopefully we can agree this has been a short amount of time. The price is now back here. Now, like I said, I am willing to cut the bulls a little bit of slack and not call it a full-blown pump and dump because of that pink line right there, the famous 200-period simple moving average. And in the spirit of being fair to the bulls from the big picture of things, the price could come down here, bounce along that line, and then start to work its way back upward. So in other words, stay up above 53, 54 cents. And if that were to happen, you would have a set of lows right here. You'd have these lows down here, and these would technically be higher stair steps in the upwards direction. Maybe I'm stretching it there, and I don't think I'd argue with you. But like I said, the price does still have a chance to stay up above that pink line, the very famous 200-period moving average. So that's not why I'm going to call it a full-blown pump and dump. However, if the price were to break below that pink line and then separate to the downside of it, at that point in time, that would literally be putting the price right back into this area of the chart. You know, right back to where it all started. And I don't mean to insult your intelligence, but price movements that are going back to where everything started, not exactly a sign of true strength or true power or anything like that. So if you haven't connected those dots, 53, 54 cents, definitely a very, very important level of support going into tomorrow. So let's see if the price can stay above it or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.